Oh shoot. Hello, hello. What's up, YouTube? What's up, everybody out there? This is the Michael Show. We are going over day trading with Malik. This time we're just gonna do a step by step. See how he does his thing. That way, you guys can see it interactive online. You can see it as he shares and just shows you little tidbits. Hello, Malik. How you doing today?
I'm doing very well, Michael. Thanks for having me on your show, man. I appreciate the invitation, and it is my pleasure to be here to explain what I do on a day-to-day basis to try to achieve to be profitable in the market.
There you go. All right, all right, all right. So, I guess with that being said, what I know the program we've talked about this on one of our shows, but just so the viewers, anybody who's watching in who didn't get the chance to watch that episode, what is the app or what is the program that you use to do your day trading?
So the app that I use, the platform that I trade on is called TradingView. Before I got into the prop firm space, and I'll explain that later on in the video. But before I got into the prop firm space, I was trading with the A&P brokerage. They were based out of Chicago, the Chicago Merchants Exchange, CME. And so I was using them, and there's basically a brokerage firm, and I was trading with them, and I was using TradingView as my platform.
Gotcha. Okay.
Yeah. So that was my live account, and I had a small account up to like $3,000 in there back when I was still working my job, and I was trading that, and I was doing fairly good using what's called a supply and demand strategy, higher time frame bias, making my entry on the lower time frame based off of what the higher time frame bias is, and yeah, and I was doing pretty good. That was now almost about a year ago. Now that we're hitting 2026, there's a lot of different things that go involved with trading. A lot of people know about the psychology part, um, the emotional part that is attached to every trade that you put in. The important thing about becoming profitable is learning how to detach from trades, learning how to move on from losses, and taking every new day as what it is, a new day. Not to overcomplicate your strategy, keep it simple and be consistent, which are things that I'm still struggling. It's not still somewhat struggling on myself, but I'm really, I'm just being honest with myself and grasping the real concept of actually implicating that into my everyday strategy and what I'm doing.
Gotcha. Gotcha. Okay.
Yeah, I know I just went on a little rant there, but
No, no, no. It's okay. I'm pretty sure it's gonna be much needed. For those who, need that education, who are starting off, who like they get stuck in something. They get stuck on one of those days where things not going well.
yeah.
You know that'll
Yeah.
help. So from the there's always gonna be times where we don't make as much or we don't make a certain amount. But what is like your, I guess, number one goal on how much you're looking for a day to day profit?
So for a day-to-day profit, it's the way you're supposed to do it. It's supposed to be based on your account size, right? So if you have $5,000 in your account, you would probably want to risk like maybe $200-300 a day to get a 1 to 2 risk to reward ratio. Meaning, if you're risking $300 a day, you would at least want to strive to get $600 on a profitable day from that. And if you're losing, and if you were to lose, and if you were to lose a couple trades, you would only be losing $300 out of your 5,000. I mean, yeah, $5,000. So the way that I would do it with a live account, you're only supposed to trade a percentage of your live account, maybe up to 1 to 3%. What a lot of what's the common thing to do. But what I like to do to be kind of really more realistic, uh, and there's really no good or wrong way to no bad or right way to say what you should be risking. It's all about what your tolerance is and what you are able to accept.
Yeah,
So so if you have $5,000 and you're risking $300 to trade, then that gives you 16. That gives you 16 days. That gives you 16 trading days
got
right
it.
there, because that gives you 16 trading days. So if you were to lose 16 trading days straight, then your $5,000 is gone.
Mm,
Now, obviously, that's like if you're sticking to your strategy and you're being disciplined. That that's unlikely to happen. And if you
yeah,
stick to that, you stick to that, then that's how you will grow your account. There's 20. There's for the most part, there's 20 to 21, depending on the month. There's like 20, 21 to 23 trading days in the month, and so you know what I'm saying? Like, so you kind of gotta gauge your account size off that, and that's how much you want to risk a day if you
okay.
want to go long term with this. I know there's a lot of people who will put 5,000 in and be risking $3,000 a trade. Basically almost full
Ooh,
port in their whole account. So yeah,
goodness.
there's definitely it's definitely something that you want to take time in. Right now, I'm at a point. I was doing my live account. I had my live account going. And I made the mistake of not having an emergency fund set in place as I left my job because I was doing well. I was doing well. I had a $3,000 account. I was risking, and not advised. I have and the disclaimer: we are not financial advisors. Any of this
Right,
information is
right,
not
right.
financial. You know,
Yeah,
yeah,
this is
you, this is
educational purposes.
yeah, educational purposes only. This is
Yes,
just
yes.
this is basically my journey and how I approach the market.
Got you.
I'm not a six-figure trader. I'm not I don't work my job anymore. I am full-time trading, even though I'm not consistently profitable. I'm still going through my own journey. But yeah, I'm just gonna put that out
Got you.
there.
Got you. Hey, no worries, no worries. It's true. We
Yeah.
all got our we all got our struggles and our journeys and our steps where we got to get to. So totally understandable. Um,
Cool.
I guess show us a little bit of well, first just show us the app
Yeah.
that you use.
Okay. Yeah. So, like I said before, I was trading on my live account, and I did not have an emergency fund set in place. So when I left my job, I basically went all in, and I was taking my losses out. Right, my losses were coming out of the account, and I was still paying my bills with my winnings. You know what I'm saying, or with whatever was in the account, and that's what the quote unquote emergency fund should have been for.
Mm-hmm.
If needed, right? Because if I would have took some money out, which I had at the time, I grew the account to almost like $6,000, and that was just like a base pay. So that $6,000, anything above $6,000 at the end of the week, that's what I was taking out for myself. And I was leaving $6,000 of buying or selling power in the account. But I didn't have an emergency fund, so when I went on a losing streak, back around when the tariffs got to popping. I went on a losing streak. The market started going all sideways. Um, yeah, I just it just went downhill from there. My psychology wasn't right. My emotions were off. I was sloppy with my strategy. I was not disciplined. That that in the long term like kills you. Like,
Yeah.
yeah, there are days, there are times where you go against your strategy, you go against your rules, and you come out a winner. But in the
Mm-hmm.
long run, it'll be bad every time. You have to remain disciplined. There's one thing before I really start getting into what I'm about to say. There's one thing that I had to kind of accept and really kind of take serious. Like this is a business. This you have to treat this like a business. Like this is where if this is what you want to do, like trading and investing,
Mm-hmm.
is where your money is coming from. Just like the way you view you getting up going to work, you
Yeah.
have to view you being ready for the market, you being disciplined in your trade, you being aware that all you have control of is your execution of the market,
Right. Yeah.
and just let it play out. And that means let your take profit get hit. You know what I'm saying? Let price at least go as close as possible to that thing. And if it start wiggling, then take that shit. But you know what I'm saying? But yeah.
Take it
But
out.
and it's easy to say what I'm saying, but I'm still working on this myself. It's easy to say that, but I'm still like really grasping and working on this myself. But you
Yeah.
know, but let's get right into it.
All right. All
Um,
right.
let's get right into it. Just a quick overview of my strategy, which is supply and demand. And supply and demand basically is I look for imbalances in the market, and what that means is I look for imbalance based on a directional bias of a higher time frame. So what that means is I'll look on the right here. This is this NQ that you see up
Mm-hmm.
here. This is Nasdaq. I trade futures in the futures market. This is Nasdaq right here, NQ. We have the 5 minute time frame, the 1 hour time frame, and the daily time frame. I usually I usually use the 1 hour time frame. This is the 1 hour time frame here. All
Yeah.
that means is each candle represents 1 hour, and down here at the bottom you can see the dates down there, but and the times and all that. But I just recently switched to using the daily as my directional bias because I just feel like it's more consistent long term. And what I mean by that is like if I know that price is bullish, meaning that we're in an uptrend, I can obviously see on the daily that we're on an uptrend for days and days at a time. Whereas in those same span of days, I know on the daily we're in an uptrend, but on the hour we can be trending down. You know what I'm saying? I could be going against the real higher time frames price movements. And
Right.
so it's less back and forth. Basically, what I mean by that is okay, now we're bullish, so I'm looking for buys on the 5 minute. Okay, now we're bearish, so now I'm looking for sales on the 5 minute, right? And there's millions of different, not millions, but there's a hella different ways you can approach the market. There's people who don't even trade with a directional bias. They look at what price is actually doing, and they basically just go off what they see the market doing. But every strategy fits everybody different. You have to stick with what works and what resonates with you. And I feel like using the daily direction as my directional bias is powerful, and because each of these candlesticks represents a whole day of price action. So
Got
it's
it.
as you can see right here. Um, we went. Okay, let me just get right into it. So let's go back to I want to go to a good month just so it's not all complicated, right?
Yeah.
Let's go to October.
All
Let's
right.
go to
All right.
October. We're gonna go to October. This is what we're doing right here is called back testing. Back testing is looking at previous price action, price patterns, and implicating your strategy on what has happened to see what would have happened had you had implicated your strategy in that moment and during that day in that trade.
Right.
So
Okay.
it's a good way to kind of practice to see what strategy what strategy is actually working for you,
Like what you
and
said.
how you would react to situations. But you have to be and when you're back testing the market, you have to be honest with yourself because it's easy to see what has already happened and be like, oh, okay, I would have did this, I would have put my order here, and I would have took profit here. But then when that thing is really moving, and then
Mm-hmm.
when it's really moving, and you really see those profits coming and going and fluctuating like that, it's a whole different ball game for real as far as emotions inside and your psychological intelligence goes behind it. But once you're able to really detach yourself, it's really just a number, and I'm really starting to get that myself, and I feel like I'm really pushing up to a breakthrough here. Right now, what I'm showing you guys, the platform I'm on is Trading View. I trade with Top Step. I'm trying to become a funded trader at this point. Um, The way I do believe in live accounts. My plan is to use Top Step to gain enough capital to transfer back over to my AMP brokerage with the Chicago Merchants Exchange. So that is the long term goal here. But
Gotcha.
right now, the way my bank account is set up, I need to pass a goddamn challenge. So
Right, right. You
so
gotta
I'm
let
trading
go.
with the top first. I'm gonna keep it 100% funky with y'all.
Yeah. I
All
hear
right.
that.
So right here, so we're on October 1st right here. So where we at? Where we at? All right. So
I'm gonna add in right now. I'm adding in to the chat the information for Trading View, so that way the viewers can see it as well. I got you.
yeah, you should put the information for Top Step too.
Top step.
That's a Top Step. Top Step for anybody who is interested. Top Step is a prop firm, a propriety trading firm. I hope I'm saying that right. That basically they sell challenges to basically regular retail traders who are trying to make it in the market. They sell 50K, 100K, 150K challenges, which means you get a $50,000 account. You got to get that account up to $53,000. If you do that, then you pass the challenge. Then you move on to the express funded account, which is where you can take payouts, right? After so many winning trades. And
Got it.
once you do that, then you get boosted up to what's called the live account. It's basically the same thing, but you get more privileges and stuff like that. So you can do
Nice.
that. You can build up your money, and you can pull out your money from the prop firm and put it in a live account. And now you don't have to deal with all the rules and stuff, but it's all on you now. You know what I'm saying?
Right.
There's no reset button when you blow your account. You know what I'm
True.
saying? Your money's just fucking gone.
Yeah.
So,
Yeah, it's like, goodbye. See you
so
later.
what's you? So, but that's the goal, though. I mean, a lot of people will stick with the prop firms, and
Hmm.
there's nothing wrong with that. But I like to have my own. I like to be in control of my own stuff. Not saying that you're not with the prop firm,
Yeah.
but long term, the live account is where it's at because you don't have to worry about you just don't have to worry about certain rules that are on the prop firms, and not to discredit rules that you have to follow on prop firms because I have to be honest, those rules gave me structure. Those
Yeah.
they're following these rules to pass these challenges for gave me structure. Like it forced me to stick to what the hell I've been trying to stick to instead of being all over the place, and a live account allows you the freedom to kind of just be all over the place, even though that's how you learn. That's how you learn, right? But
Yeah.
a challenge, that's one thing that I can say about the challenges, that it definitely forces you to stick to something that works so you can pass this challenge, so you can actually get into the part where you can start making some real money instead of paying and paying for these challenges. And a lot of people look at it as you're making the prop firms rich by you constantly failing and having to repay for a new challenge and stuff. But at the same time, you got to think about it like this: like the money, the way that you're acting and the way that you're trading on these prop firms is how you would be trading in your live account. So you would all the only difference is you would just be refunding your own live account with this money that you're giving the prop firm. So
True.
it all plays a part. Everything balances itself out.
Yeah. 'Cause you gotta
Yeah.
you gotta crawl before you can walk.
No, real shit, and
Hmm.
that's real. So here we are. Here we are. Without any further ado, um, we're over here. If we look on the left side of the screen, we see price moving in a bullish direction. Down here is October 13th. I know we said we was gonna start in October, but there was a whole lot of bullshit happening right here, and I didn't feel like getting into all that. But basically right here, would you
Hmm.
basically just a real quick spell down here on October from October 13th to the 17th? This is consolidation. Price moving sideways. It's ranging. It's consolidating. It's going up. It's going down. It's taking everybody's money. Big banks, institutions, they're accumulating liquidation right now. they're getting ready. You know, after this, usually a big move happens, and you see what happened after that, right? And
Right.
because they're accumulating positions, this is what you see in the markets is in fact a war of buyers and sellers.
Hmm.
Like institutions in different parts of the world, trading institutions, you know what I'm saying, trading institutions, banks, all that type of stuff. They're the ones who are like really moving the market. Those $1 trillion deals and all that is what's really moving the market. Damn, this thing is straight up glitching on me. Oh
What, I got stuck on you?
no, it keeps refreshing. All right,
Oh,
so we'll just do this part what's been more recent. So okay, it's a better example anyway. Sorry about the little bit of
all
confusion
good.
on where we're going to state this example here. But okay, so this is how I trade. This is how I decide what my directional bias, and this is my strategy. So right here we see December 1st, 2025, right? December 1st,
Mm.
2025, right here. We're bullish on this on the left side of the screen here. We're bullish, and price is moving up. And so when price is moving up, this is what I consider my directional bias chart. So when price is moving up, I'm going down to the 5 minute on the trading days, and I'm basically looking for buys. I'm looking for buys until I see a break of structure on this daily time frame, right? And
Right.
until I see that break of structure, and only until I see that break of structure print in that way, or at least pass it, then that is when I'll change my directional bias. For example, for example, we saw price going up right here. Price was bullish, which means it was going up from really from right here. November 24th, you see this big move on November 20th to the downside. We
Yeah.
tapped at 24,300 down here, and then price came up back and it hit this area, but we passed it, which which technically is a break of structure, but we really didn't get a break past this candle. We got this wick right here. That just means that price went up here and rejected and came back down here. But this is we you want to really focus on where price stopped, right? Where price stopped at, where the top of price was before it made that move in the other direction. Because if this gets broken, that means that the market is moving in that direction. That's the most probability, right? So we see a break right here. We see a break in this structure when price came up right here on the 21st, and then on the 25th it came up and broke this structure. This is my directional bias chart.
Hmm.
This is the only reason why I look to the left side of the screen to see what is the goddamn direction that we are going in,
Huh.
right? And when that happens, that's when I go over to my 5 minute chart during that day, and I look for, in this case, I will be looking for buys in this direction, right?
Okay.
So price continues up, and and I keep moving structure. We're seeing here we got a little bit of consolidation, kind of. We're still moving bullish though, right? And then right here on the 12th of December, price completely breaks structure, completely smoke structure right here, right? So what I do there now I'm about to get into how I actually approach it. I just wanted to show how I identify where price is moving, and I know there's probably a lot of people like, what the hell, are you using the daily as your
Yeah.
direction and you enter on the 5 minute? That's too far away. A lot of people use the 1 hour. A lot of people use the 1 hour and the 5 minute, right? But
Right.
I'm getting sick of the fluctuations and during market times. Oh, we're bullish. Oh no, okay, we're breaking the structure now. We're bearish. I just want to see a I want to see a long term view, and make my trades on a smaller time frame, and just basically scalp the market. I consider myself a scalper slash like intraday trader because sometimes my trades can be anywhere from 15 minutes, but a lot of times my trades are like an hour or something. So maybe I am just a regular day
Huh.
trader, but
15-minute trader.
so really, so right here, price went up around December 10th was the last high that we made right here, right? So if we go right here on our 5 minute time frame to, and I keep it straight honest with myself too when I'm back testing. Like If there's something that happened and I would have taken that trade and it would have been a loss, like I keep it real with myself. Like I count that as a loss, and I write this shit down when I'm like really looking at it like in a
Yeah.
real way.
That way
But
you know what's up.
let me zoom in a little bit here. Can you see this right side a little bit better?
Yeah.
All right. So right here we have on the December 10th price pushed up. It was all time highs at $26,000 a contract. So in the futures market, it's contracts instead of shares. I have no actual ownership of anything in the futures market. I am literally buying and selling the price. If price is at 26,000 and I think that price is going to go down to 25,000, I am
Hmm.
selling contracts. It's as simple as that.
Got it.
So so that's what that is. And so boom, the 12th of December, we see that price pushes down, right? It pushes down past this line that I have right here, which is where structure is, which is the candle. Which the reason why I have that line here is because this is the last candle that broke the last high, the last previous structure, which is right here in this area. That's why I have that line here. And so I see on the daily that we're breaking past here, even if we haven't printed or anything, with this being my directional time frame, with printed meaning that the day has went by and price printed right here. That's real confirmation that now we're pushing forward. But a lot of times if you do that, you'll be missing out on live moves, right? So if price goes past this area, I am now looking for sales past this line. Period.
Got it.
Right.
Let's see,
So
man.
boom, this December 12th, we're trading down right here. Now you'll notice that we got this line right here, right? We got this big candle going down, but over here on the right side, you only see from 6:30 a.m. to you'll only see 6:30 a.m. to right here to about 1 o'clock every time because I have it set up to where I have it set up and you can go right here to the right, go to sessions. I have it set up to regular trading hours, and
Ah,
that means I just only see. Yeah, that means I only see the New York session.
got it. So you don't. I
That
got it.
means
Okay.
yeah,
You ain't doing
yeah,
it
and I'm not
international.
sure. I'm not sure if you can change it to another another session or whatever. But if I wanted to press extended hours, you would just see everything. You would just see what price was doing all day, right?
Got it. Okay.
So, but I trade what's called the New York session, which is from 6:30 in the morning, West Coast Pacific time, 9 o'clock or 9:30 in the morning East Coast time. Nine basically, but we on the West Coast, so
Yeah.
6:30
Yeah.
in the
What's
morning to you said what?
I said West Side.
We on the West Coast, man. The Barry with it, but yeah, I trade from 6:30 in the morning to about 1 o'clock. That's the New York session. I personally trade from 6:30, and if I'm not in the trade by like 10 o'clock, then I'm done. Then we just call it a day. But that's what I love about trading. It gives you that freedom to do
Yeah,
whatever.
you got to. Yeah, you can do. You can pretty much do it whatever
But
time you feel like it.
yeah, so okay, so let's get back to the strat, right?
Uh,
So boom, so right over here, we look back to the left side of the screen. We see that price on the 12th of December, we broke structure. We broke structure of the December 10th. So that means we are in fact bearish. The California bear is pushing down on the market. Sell, baby, sell. so and so and so what I do here, what I do here, what I'm about to show you is unprecedented. I
okay.
have literally I didn't see this on YouTube. But this is something that a lot of people already do. They have a high and a low. What people usually do is they mark the high and the low of the previous trading day, and they kind of gauge the next trading day off of that, right? They
Hmm.
kind of like let their strategy, they kind of incorporate that in their strategy that way. They're basically careful around these areas, right? So on the previous day, what these lines would do, let's say price, let's just I'm just about to make up some shit real quick, right? Let's say price stopped right here
Hmm.
and then price stopped right here. And what this means is on the previous day before let's say on the 11th, we're on the 12th right now. On the 11th, this is the highest price went and this is the lowest price went, right? And so on the 12th, when we're trading, we're watching for price to hit these lines to see what price is going to do around these lines, right? Because there's those are areas where price didn't go past the previous day. You know what I'm saying? So
Yeah.
that's what makes that shit important. Like once you really grasp the understanding of these two straight lines, boy, I'm telling you. But it just gives you clarification. But what I realized, I know I'm probably late. I know there's probably gonna be someone in the comments is like, man, bro, there's always someone who can do better. But whatever.
Hmm.
But price is coming down, right? We're bearish, right? So what I do is 630 is the start of the market. When that thing starts up, this first 5 minute candle, I look at the daily and I look at the 5 minute. That's all I'm looking at. So this 5 minute candle starts. This is you don't see all of this, right? We only see this now because we're back testing and we're looking at uh price action that has already occurred. Price action has already happened. So we're just testing our strategy to see what we could have done or what what would have happened if we would have implemented our strategy the way that we're trying to implement it on the market, right?
Right.
And we're being completely honest with ourselves too, because it's basically like you can see what's happening, so you want to be real with yourself, right? But all right, let me stop rambling. So boom, so we got 630 right here. We got 630, and now we get that move up. We see that price broke. We see price printed right here. That means price started at 635. At 635, this is the 5 minute time frame. So this candle started at 635,
Mm.
and we went up and we printed right here at 640. At 640, this candle printed up above this line. So that gives me the right in my own
Yeah.
terms. I give my that tells me, okay, this is our new active high of the day. That's why I call it an active high, active low, because it's constantly moving until it doesn't pass that point anymore, right?
Yeah.
Which is beautiful. It has been a game changer for me. I'm not even gonna lie. And now, but so the way that I incorporate with my strategy is I'm constantly moving. I'm gonna show you how I incorporate it with my strategy. Um, but so we see price went up right here, right? The next candle was 640. Price came down, broke structure, kind of broke structure here. That's not really structure broken, but price is just moving down. Well, that is kind of breaking structure, but this is the market just opened right here, so you still want to be careful. You want to watch what's going on. And then price came down to right here, right? And then we came up to this half point. This actually would have been a nice sale, not gonna lie. You're looking for a sale. It's aggressive, super aggressive, because the market just opened and could have did anything right here and still went down in this direction because the market just started at 630. This is when it's extremely volatile. But you could have took a sale right here. But we're gonna keep going for educational purposes, right? This is more advanced. This is some
For
more
real.
advanced. Like, yeah, if you
Yeah.
take this right here, you got balls of steel,
Mm.
because this could have at this point the market could have did anything because it's literally 630, and this is when it's the most volatile throughout the whole trading day. But this could have been a sale, but let's pretend that we didn't take that trade, right? We weren't
Right.
comfortable. We weren't comfortable with this trade because it was too early to it was too close to the market open. Anything could still happen right here. Even though we're bearish and we're trading in this direction, this is something that we would have taken. It created structure right here, right? And then this next candle, it created a high. The next, and what you pay attention to is the next candle after a new high is created. That candle engulfed this candle, which
Mm.
means the selling pressure was stronger there. And our directional bias, based off this daily, based off what we're seeing over here, the structure that was already broken on the daily, we're already looking for sales. So that's already getting me a little bit hard right there.
I
and
heard
so,
that. Yeah, I'm ready.
and
I'm ready.
so,
Let's go.
but you gotta control yourself. You
Right.
gotta control yourself. And then, but let's. All right, let me stick to what I said because I don't want to start jumping around. I'm a little excited. so so we're coming up right here, right? Let's say we let that one go. Let's say we want to look for another entry to really get confirmation that price is going in our direction. So we see price move up right here. The next 5 minutes, 650. This candle just sits right here, prints right there. 655. We're still right here. This is what it does. It creates a little doji. And then boom, we get another break of structure and it creates a new low. As you can see, brother, as you can see here, 650, 6:55, 7 o'clock. Price breaks structure here. It breaks structure. You see how price completely breaks this candle. It breaks the wick, which is a little stick right here. It breaks the whole body of these two candles that were moving a little bit sideways right here, creating a new low, breaking down our active low line. Automatic. Automatic. I'm getting in that trade. I'm getting in that thing, boy. And so
Mm.
and there's a lot of different ways you can get into a trade. I like to do what's called limit orders. There what's known as the market order, where you just there's a little button up here, say buy and sell. You just hit sell. But I like market orders because you get in at your a specific price. You can really structure your trade differently. It's that's really another conversation for another day. I'm just going to show you
No, yeah,
what
this can just be,
Yeah,
we'll just
just
keep this
just
as part
just to
one.
show you the way that I do it. All the
Yeah.
details. That's really that's a really a whole other video. I'll be
No, yeah, I
here.
got you. I got
You know
you.
what I'm saying,
It's
even though I would love to talk about it, I
yeah.
would love to
It,
talk about it. But anyway,
this is for
but
beginners.
right,
Okay, it's for beginners.
yeah. So right here, so what I do is I place my order right here, and what I just recently started doing. Let me keep it real. What I usually would do is I place my order right here. I will place my order in the middle of this zone, or the middle of this candle right here, and I would hope for price to come back up and tap this middle area, tap this area where my finger is. I'm gonna move it. I'm gonna move my finger, the little mouse off of that, just so it can be normal. But where I'm wiggling the stick around, that's where I want price to come back up and tap this little gray line right here. This little gray line that you see, that's where price would come back and hit. As a matter of fact, let me just keep it. Let me just show you. Let me just let me just make a little line here. So this yellow line right here, this is where we will want price to come back to. This middle is literally the middle point from the green, from the green and red. The red is where we are not in profit. If it goes to the end of the red, we have lost the trade. If it comes down to the bottom of the green, you have won the trade. You know what I'm
Mm,
saying? And
right.
you you don't have to have a stop loss here. You don't have to have a take profit here. But this is just showing. This just helps you gauge how much money you're risking and how much you're going to be in profit at this point right here.
Right.
This is what this helps you do.
Okay.
And so, yeah. So,
Yeah.
but this is usually where I would have put my orders at. A lot of times, price does come up and it hits this middle point. But
Mm,
as you can see right here, price did not do that, and that shit pisses me off. Because
mm,
that shit pisses me off, and that's why a lot of people do market orders. Because if you in a market order, if I was to see a break structure, I could just bam hit sell and get in. But
and go right.
it's there's pros and cons to every thing that you choose to do in the market. Like,
True.
yes, in the market order, I would be able to get in right here, but I will have to be in the trade longer for it to hit my target. Whereas if I put my order up here, which doesn't seem like a big difference, but it is when price gets close to your stop loss and then it fucking rejects on you. It comes all the way up to the other side. And if you would have just had put your order up here and placed your numbers right there, and price would have went to that same distance, you would have got what you
And
needed.
they got it.
But
Yeah. Right.
that's another video for another day. Like, that's where emotions kick in. Yeah,
Yeah.
but
All right.
yeah, so what I've been doing is I place my order a little bit lower on the candle now, just so I have a good chance of getting into the trade. I go to the half point and I always target the lower half of the candle, right? And so
Right.
right here, if you would have did that, you would have gotten into that trade. As you can
Mm,
see, this little stick right here, this little wick on our goddamn, I can't grab this right here. This little wick on this next candle that formed, hit
mm,
that right there, right? And what I like to do is I like to do a 2 to 1, 2 to 1 risk to reward ratio right there. You see where it says in the middle where it's blue, right here. You see where it says
yeah.
2.08. It's still a two
Yeah.
to one. It's just eight, just eight extra points. Ain't nothing wrong with that. And
Okay.
so basically, if I was to get into this sale right here, let me get rid of these lines. So this is our active high. This is our active low. I'm gonna get rid of the active low right now. So I don't want to confuse nobody. So so this
Please
is our
do.
active high where price never passed and we're looking for sales, right? And we
Right.
saw price come up, create the high, and then we broke structure. and we moved down. Then we broke more structure, which gave me all the confidence to get into this sale. And you want to give your stop loss space off the candle, which is why I put it back. You want to give your stop loss space off every time you get into. I don't give a damn how big that candle is. You want to put your order wherever you can put it at, to where uh, your stop loss is behind that candle, which gives you more opportunity, more chance of that trade playing out for you. Because price could have came all the way up here and could have sat up here and could have wicked me out, right? And
Right.
then went down. Or price could have came up here and could have put them wicks up here and would have went down. You don't know what's gonna happen.
True.
So you always want to just at least give some breathing room behind that candle for your stop loss to give your trade more of a chance of actually playing out, even if it doesn't go all the way to your take profit.
Okay.
But
How would you how would you say for a person starting off, like how many how many days would you say it may take for them to get a full, not a full, when do you see that them getting a profit? Like how long did it take you to get that first profit?
man, when I first started, when I okay, real quick before I get into that, I'm gonna just
Yeah,
finish it up
yeah,
with
yeah. No
this.
worries. Yeah.
Uh, I'm just finishing up with this because this is basically the strategy right here. I'm not even gonna like go no further because I don't want to
Okay.
overcomplicate things.
All right.
Basically, you get into that sale. You this is me, and this is for people who do limit orders. This is limit order trades, market orders. If this was a market order, you would have just pressed that sale button. You would have picked how many contracts you wanted based off how much you wanted to risk, and you would have packed that baby right there. You would have been in there. You would have been in there
Hmm.
ready to go. But the market limit orders are a little bit more sophisticated for the people who like to sip their wines with the pinky in the air. That's
Hmm.
how I look at the limit orders. I like that.
Got it.
I like to see price come up and smack a certain area. Come up and grab me, then take me down. That's how I like it. But sometimes that's good. Sometimes it sucks, right? But
Yeah.
but
Right. Right. Because
me
you
with
could be
me doing
waiting.
this market order, yeah, me doing this market order, I got in right here and price was out right here. I know exactly how much I'm risking. I know exactly how much I'm about to get. If I would have just did a regular market order, then I would have just got in right there, and my stop loss would have been up here, and then I would have been like, damn, I don't want to risk that much. But
Yeah.
it's too late. You already hit the damn button, and you didn't want to it's a lot of shit that goes with that.
Yeah.
But basically, I put my limit order in here at when the 7 o'clock candle closed. So at 7:05, that's when I put my order in here. The 7:05 candle ended up coming, tapping the order. It did not hit my stop loss. It went down. It went down, right? And once it get close here, I'm moving my stop loss to break even, and that means I'm putting my stop loss back here in this area, which is where my entry was. So if price does decide to not go down and hit my take profit and come back up here, at least we'll get taken out at break even. It'll be no loss, no harm, no foul. Live to trade another day. and I only do one trade a day. I'm not about to jump back into the market and do all that. I'll do one trade a day. I go on about my day after this.
Yeah.
And
Okay.
and people and look, I could have got it because price kept going down. It did a little some bullshit, but
Yeah.
that there's pros and cons with that too. Everything that you decide to do in the market, there's an upside and a downside to it. There's
Right.
two sides to everything in the market. But yeah, it hit me. It came in, and then you would have got your 2 to 1. So if you were risking $100 right here, you would have got
Mm.
$200. And
Wow.
price, and you would have got tagged into that trade at 7:05.
Hmm.
At 7:25, you would have made $100,
Damn.
just like
Nice.
that.
So yeah, that's
And
quick.
and it's for anything. And this candle that you put your order in could be as expensive as you want it to be. Which means if you put $500 up here, and
Yeah.
you got you and this number says 2, which means your risk, you want 2 times your risk. And you can put anything you want right here. You can put 1, you can put point 0.5 to your risk, right? You can do dumb
Yeah.
shit. but
Ah,
but that's what I love about this. You can go all the way down here. You don't even need this. You don't even have to put this right here. You can
right.
put a limit order without this being here. But this
Mm.
just helps you really structure your order. You know what I'm
Right.
saying? It helps you really know what you're really doing for real. But I'm not. that good with numbers like that. So I need this
You need that.
motherfucker right here.
You need that little
You
help,
know?
that little assistance.
Hell
Ain't nothing
yeah.
wrong with that. Shoot,
See me 10 years down the line, I'll probably
right?
go in there. All you'll see is niggas. So, but what you see for the most part, I'm gonna just zoom
Mhm.
out real quick. What you see for the most part, this is a naked chart. I have these two lines here, but a lot of people have a lot of indicators and a lot of other little things to help you read what's going on with this. I look at pure price action, raw, straight butt cheek, man. Ain't
Mm.
on a female. You feel me? You know what I'm saying? I like real butt, man. Real booty. You know what I'm saying? We don't do the implants.
Oh
we don't need
man.
we don't need all the extra foundation in the makeup. And which and I'll talk about the moving averages and the Fibonacci's and all of that. No, we don't need all of that. You know what I'm saying?
Yeah,
That's me
right.
personally. Not disrespecting anybody that's who's using that, who's probably more profitable than me. You know what I'm saying? Like, more
Yeah,
power to you, but I don't like to use that. But
understood.
yeah, but this is basically my strategy. I look at the daily time frame. We had this break of structure right here. Let me just get rid of all the let me just get rid of all the BS. We're gonna
Okay,
all these lines because I like to see just straight raw price action.
let's see.
So we had price moving up right here in this area, right? And then right here on this day, on December 12th, price broke structure. Price broke structure. And then uh, wonder my clients for calling me. And so we broke we broke structure here on the ninth. We broke structure on the 12th. This high that was created right here on the ninth and 10th. We broke that structure, and we all we were doing on the 12th was looking for sales because on our daily bias over here to the left, we broke structure to the downside, and we're looking for sales, and it played out for us beautifully on the 12th. We broke structure right here on the 12th around 7 o'clock, right 7 o'clock on the dot. We smacked that order right there. We smacked that baby
Hello.
right there, boy. Put that stop loss above that candle, and we watch it play out. You watch it play out, no matter what happens.
Let's
And
see.
yes, you can take profit anywhere down in here. You can take profit right here, but which is good. People do that. I was doing that, but on the days when you take losses, I
Hmm.
noticed for myself, I don't take my losses early. I always let my loss hit the. I always let price hit that stop loss because I always want it to stop and go the other way, right?
Right, right.
But when you're a profit, this is where psychology comes in. When you're a profit, people tend to take that shit early because they don't want it to turn around on them and go back up here. But you have to be strong, nigga. You have to be strong, bruh.
Man up. Man up.
You gotta be strong. And when you see price moving in your direction, when it gets to a certain point down here, if you really got a problem, just put your freaking stop loss to break even. That way, if it does come back up and it goes all the way up and it takes you out, you're not losing money. You're not losing. You're still in the trade and you're letting it go all the way to that take profit. And there's no feeling like hearing that freaking oh that failed. Oh, there's no feeling like hearing that. And you look and it's a good order field. You feel me? And it's in your
Yeah.
direction. You hit
You know
full
you.
T. That's called full TP. You got the bag. You secured it. You have brought home the booty. You brought home the booty for that day. And it only took you what was that? 25, like damn near what? 20 minutes. 15,
Mm.
20 minutes.
Wow. Okay. I
Yeah,
see.
25 minutes. 5, 10, 15, 20, 25. Yeah. 25 minutes. It only took you 25 minutes to do that.
That's
Let's say you
crazy.
put $1,000 right here. That's a $2,000 in 25 minutes.
Mm.
And you wouldn't even have to take profit right there. You could have let it keep going. That's something that I'm working on now. I need to be. It's levels, right? You need to first be consistent with
Yeah.
hitting targets, and then you can start letting prices run, winners run, right? But you could have let it go all the way down here, and that would have been 3.9. Let's
Mm.
say let's say you risked $1,000 on that trade. Let's say you risked $1,000 on that trade, right? $1,000 times 3.9. I'm on the calculator with it. That's oh damn, I'm tripping. I didn't need the calculator. Excuse
Okay.
me for my mathematical incompetence, audience. But
All right. All
that
right.
but that number
Well,
is $3,900 down here, which was pretty simple math. Now that I see it, I just didn't even want to try.
yeah.
That's
It's
let me
okay.
see what calculators do to
Right.
us.
Man,
but yeah, yeah, that would have been $3,900. You would have gotten to that trade at 7:05, and you would have been out of the trade at 8:30. A little bit
mm,
over an hour. A little bit over an hour, you would have made $3,000, bro.
that's crazy.
Damn near
This is,
four.
and that's a real time right there. He's showing
This
y'all
is
real
real.
time.
This is something that really could have happened. This is real. This is what really happened in the market. If you would have followed this strategy the way I'm laying it out, you would have
Mm-hmm.
won that on that day, like or however much you risk. So that's basically my strategy. It's really as simple as that. Um, and
Okay.
and and yes, I take losses. Yes, I take losses. There's days where my directional where I'm. There's days right here you see where we're still going down, right? We're still
Yeah.
going down, and let's say, even though this is just a beautiful, we don't see that here, right? It's just so
Yeah.
beautiful when you
It's like
we're seeing a
up,
whole lot of downward
down.
movement. But
Yeah.
that's how you know that this is a good strategy because you just see it, right? Even though you still see price moving up every day, all
Mm-hmm.
the big moves are to the downside. You see
Right.
that. Well, on our right side on the 5 minute time frame, all our big moves are to the downside. That's the power of using the higher time frame as your directional bias and making your entries on the lower time frames because all the big moves will be in that direction if you're
Mm-hmm.
correct about the higher time frame directional bias in the first
Gotcha.
place. So yeah.
I see.
So
I
yeah, man.
see.
Yeah,
That's
it's a beautiful
definitely.
struggle.
Yeah.
It's a beautiful struggle. This is by no means. This trading. I'm gonna stop sharing my screen because I
All
need you
right.
to
No
see my
worries.
face. I
I'll
need you
close
to see
this
my
out
face for
because I think
a
I took
second.
out. Let me take this out. Shoot. Hold on. I think I got
I
to
have to
the
take
one.
once he's here.
Did I take it out? There we go. All right. Perfect.
Yeah.
All right. So yeah,
Yeah,
as
but
y'all see.
I'm gonna just say this real quick though before we
Yeah,
trading
go ahead.
is by no means easy. This is it is a profession. You have to treat this like a business. It is your job. And this is something. It's easy for me to say this, but this is something that I'm really getting down for myself now,
Yeah.
right? It is your job to execute your strategy when you see your strategy play out. It is your
Right.
job to be disciplined. It is your job to be alert, be present for the market. You don't need to be getting high. You don't need to be getting drunk. You know what I'm saying? When you know you're supposed to trade the day before. You don't need to be staying
Yeah.
up till 3 in the morning and trying to get up and trade. You know what I'm saying? You don't need to be distracted while you're trying to make money in the market. The people around you need to know that this is your business and this is your income. If they don't respect it, then they need to move away from
They
your
need to go.
vicinity.
Right. Right.
And
Right.
yeah,
That
really,
way you
if
got
you
that
have
space.
anybody in your life that is holding you back, telling you that this isn't real, you need to get a job, get the fuck out of here. A female telling you that no, you need to get a job because you need to support this, you need to have this, and she doesn't want to not saying she doesn't believe in your vision. And yes, there's nothing wrong with having a job, but damn it, you need to make it work to where you can still trade if this is what you want to do. You need to put
Right.
all your eggs into this, just like the Black Mamba said. Put all your eggs in one basket. And what happens if it doesn't work? Get some more goddamn eggs, bruh. Rest in peace, Kobe,
Fill it
nigga.
up. Fill that basket up with all them eggs and hope
Straight
they
up,
don't
but
crack.
nah, bro. You keep going. Anything that you strive for wholeheartedly and you push for, it will play out. You just got to keep going. If you have a job and you want to trade New York session in the morning, work swing shift. I hate swing shift. I always hated that.
Hmm.
I don't want to work the whole damn day like that. But damn it,
Yeah.
at least you'll be able to make more in the morning than you probably make at that job in 2 weeks. You know what I'm saying?
Right.
So
That's true. That's
so you
true.
just keep pushing until you're able to get up out of there and just keep moving forward and make sure you have that emergency fund, whatever that number is for you. So and that's real. But negative people who are trying to deter you from moving just because they see you not profitable, they see you not consistently bringing in money. You have to slowly kind of stay away from those people, especially if they're directly involved in your day to day activities. Like people that you love will hold you back. People that you love will
Right.
hold you back. I
Right.
mean, they say that the journey is lonely, and that shit is, man. I mean, as far as having someone to talk to about what's going on, you know what I'm saying?
Yeah.
I mean, if you lonely in real life, that's a personal goddamn problem.
Like that's
but
on
I
you.
mean, you know what I'm saying? But but as far as like you trying to figure this trading thing out, it's all on you. Only this is it's you versus you on and when you approach the market. So
Yeah,
nobody people can show you these strategies all day, but it's you're the one who has to make it work. At the end of
right.
the day, you're the one who has to get on your computer and press that button. You have to make a decision for your account. You're risking your account, your money every day.
That's right.
You know what I'm saying? Just
Yeah,
as we're just retail traders, but you're getting a piece. Your little trade, your $100 trade is a part of $1 trillion movement of
mm-hmm.
real players every that are really like moving the market every day. Like that's
Yeah.
that is
That's how it is.
you don't have a seat at the table. But you know what I'm saying? You outside the building throwing
Yeah,
out tickets. You know what I'm saying? You outside the building throwing out tickets and we making money out here too.
we
You
making something like shoot.
know?
Throw me a bone.
Man.
Well, shoot. No, yeah.
Yeah,
This is
man.
all good information. I hope not hope that all the viewers, anybody who's watching it, if you have any questions, definitely feel free
Yeah.
to comment.
Yeah,
Um,
and just a real quick shout out. Where I learned my information from was Doyle Exchange. You can look him up on YouTube. He has an Instagram that he's a real trader. He made it out of Detroit. He's doing his thing in Miami. Like, look out! He has a Discord. Uh, there are people like Q Banks. These are I'm just naming different known traders that talk about a lot of different strategies, a lot of different ways to analyze the market.
okay.
Swaggy C, shout out to Swaggy C. Um, there's a couple female traders. I can't think of her name, but Camilla. She's a good trader. Um, yeah, there's a lot of different people. Mark Douglas, you got to look at some of their quotes on psychology, stuff like that. Yeah, documentaries floored. There's a floored documentary that talks about the good old days when people were on the floors out there in Chicago and New York
Hmm.
and trading like that before
Nice.
it went full digital. So there's a lot of information. Like you can pay for discourses, but there's a lot of information out there where you can just learn. You can just learn. I mean, and try not to take too much information in, but there's a lot of different people that you can grasp information on. You have to just find a strategy and stick to that strategy. I don't believe that all strategies work. I do believe that all strategies make money, but not all strategies will have you at a 50% consistency rate.
Got it.
You need to be at a 50% consistency rate to be consistently profitable.
Right.
Like you need to win 50% of your trades to be consistently profitable in the market.
Yeah, you got it.
Which means you can you can win 15 trades, you can lose 15 trades. But if on those 15 trades, if you won $4,000 a trade, and on those losing trades you lost 2,000, you're still up in profit by thousands.
Yeah, right. Right. You still
So
at least you didn't lose. Yeah. No, that's
yeah,
right. You want to yeah.
and that's consistent. That's consistent money right there. You're taking losses and shit, but in the long run, you're not losing money. Yeah. So
Yeah.
that's what it's about, man.
All right. Well, hey,
Thank you for having me, bro. Sorry I went on a rant, but
no worries. It's all good. Sure. I think this was a good second part. Definitely a better breakdown of how you day trade, and at least people now they can see it in this video, and they can be able to go back and see how you did it and what you did, and maybe be able to use either your technique or be able to use the information that you given to see what they could do on there. So thank you for having us.
I
Thank you for being on
definitely,
the show.
I definitely hope. Yeah, I definitely hope my some of my information can touch somebody because
Yeah.
there's been a lot of certain things that you think that you say don't matter can really resonate with somebody. You know what I'm
Right.
saying? And so and that has happened for me on YouTube, and I'm pretty sure people who make videos probably think like, man, nobody listening, but then people do listen. Right?
Right.
People do listen. Like things that you say deeply affect people. So
Yeah.
yeah.
No. Yeah.
What you got going right here, Michael, is a beautiful thing. Like this platform is giving people like me a voice, man, and I appreciate you for having me, man.
Oh
Like,
man,
and
you're welcome. You're
I hope
welcome.
that we can really make great videos in the future.
No. Yeah. I plan for us to do even if on the next one we kind of balance it off and maybe go off on some other topics and also stick to some topics on day trading, I would like to have you back on and we'll go over, the next session coming up soon, and I'll let the viewers know and the subscribers know. But thank you for being on the show, and we'll chat next time. Until next time,
But yeah,
bye.
definitely consider this video the first video of my trading journey. You'll see me
There you
down the
go.
line.
There you go. All right,
All
man.
right,
All right. Well, we're gonna end it, and I'll holler at you a little bit later.
all right, man.
All right, cuzzo. Be easy. Have a good
All
day.
right, thanks for having me.
You're welcome.